Okay, great. So this is a mix. Let's start with expenses. So I'm just going to move quickly but show you a range of things. So say, for example, let's stick with our 12,000. So rent expense and then bank. So you paid, say, every year your rent is 12,000. So you paid 12,000. Sorry, well, you should have paid 12, but you pay 8. 8 here and 8 out of the bank. I'm going to change my pen color. So that means that we have an accrual of 4. Right? Accrual of 4. Right, great. So we transfer this, if you like, this gets transferred to the income statement of 12. Done. Okay, so now the question might say something like, well, this is 2010, for example, December. Then you get a question that says, oh, on the 1st of January 2011, the opening accrual, the business had an opening accrual. So this was the closing accrual of the previous year, it becomes the opening accrual of the next year. Remember, like I said now, when I do the next year, I'll have rent, 4,000 out of here into here, right? I mean, I brought this down and carried down. Well, okay, let's just do it. Carry down, brought down 4. So that's the transfer out of here. Transfer 4 out of here into here, right? This is the reversal, so it's here. So it would tell you that the opening accrual is 4. You'll get this kind of thing. The opening accrual is 4. Then, of course, you'll pay rent for this year. So let's just say, let's have rent again. You might pay. Now, here's the thing. Now you know that you need to pay 4 for what you owe for the last. You need to pay 12 for this year. But you could have done something crazy. You could have paid, let's just say you had paid 10. So you paid 10. So if you had paid 10, that 10 is made up of what? That's 4 for the previous year and 6 for this year. So again, given what I've been saying about what you need to transfer to the income statement, well, you need to transfer 12. There's no question about that. You do. So it means if you've paid 4 for the previous year, technically, and you've only paid 6 for this year, well, that means you have another accrual at the end of this year of 6. Right? Accrual of expense. So that's kind of the skill you have to kind of get good at. Just kind of being able to know what it is you're doing. Let's do this. So this is an accrual where you have this kind of thing. Let's do a prepayment scenario. Sticking with the same scenario, I'm going to start off again with this accrual of 4. And this time, let's just say you paid 20. So you paid 20. Well, 4 of this is to clear out that, and you've paid 16. But like I say, you're always transferring 12. So it means that 12 of this must be for this year. And so that means that you have another 4. Let me actually say you paid 21, just to make it even just slightly closer and clearer. So that means that if you paid 21, you've now paid 5, if you like, is your new if you paid 20, so 12 of that is there, and you've paid, well, you've paid an extra 5. So it means that if this is too much, you've paid too much for this year. So it means you've paid 5,000 too much, and that's a prepayment of expense. So 5,000 there, 5,000 there. I mean, that's the only way this is going to balance, right? So because what you've done is you've paid 20. I'm just going to get rid of this so you can sort of see where I'm going. So what happened is that you owed 4 from the previous year, then you paid 20. 4 out of this 20 clears this. 12 out of this 20 clears this, and then you have 5 that's too much in here. And I can only transfer 12 to the income statement, and this has to close. So it means you've paid 5 too much. So I need to take out 5 out of this and put it in prepayment. And that's how we do and deal with this kind of situation. But this you have to practice. It's a T accounting thing. You can't just watch it. You have to kind of do a few, and I will send you some exercises, but you need to kind of get used to it. Okay, right, and then let's look very quickly at the same thing. The same thing happens with income. So you could have again the opening balance. So for example, let's say that you were supposed to receive rent received and bank. So let's just say your rent for the year is 12, and then you received 10. So you received 10, and then you have 10, and that means you're still owed 2. So you're owed 2. So you have this accrual of income of 2. Now, of course, like I said to you, so this, if you like, gets transferred. That's done for that year. Done. Now you have this 2 that you're still owed. So let's have rent received for the next period. Well, I could do it here, really. Let's do it here. So I transfer this out of here into here. And debit and credit accruals, and then we have it here. So you're now still owed 2. So now you receive from this person, say for example, you receive 8. So you get a check of 8. He sends you a check of 8. Now we have a problem again. So what he's done is 2 out of this 8 covers what he owes you from the previous period, and he's only paid you 6. So it means he still owes you another 6. So what we now have is we have 6 because he owes you 6. I mean, of course, this is now closed, and you have 6 over here, and that means I can now transfer again 12 to my income statement again for the next period. And this closes. So the key point is that you'll have this kind of mix, but you have to just keep on doing them to get used to them. You can do it logically as well. You can think of what it is you're actually doing. But I think it's good to just kind of keep practicing and the movements from one period to the next. Do it logically and use the T accounts to confirm your process. Okay, right. And I think that is the end of this chapter. I mean, of course, this has to be put through journals, right? And there's nothing really to it. It's just saying that when we record this type of thing, we must show them as journals, because remember that we need the general journal, and the general journal has to record these type of events, right? Because remember, we can't have anything going to the financial statements or the ledgers if they haven't come through the subsidiary book. The subsidiary book is a general journal, and technically there's no real source document for a lot of all of this that's happening. We're just making adjustments at the end of the period. Okay, great stuff. And that's it, and I'll see you in chapter 13.